Today, the stock market pulled back to critical support as big tech is now reporting earnings. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today SPY was down 1.59% and we did gap down below that support at 411. So we instantly knew that there was something happening in the price action, and we did get the full trip from support level to support level because we came all the way down to the next critical support right around SPY 407. Now very quickly, if we flip this over to an hourly chart, you can see the lows is actually down here at 406. So this is definitely going to be one of those bounce or die support levels that SPY needs to bounce from. Otherwise, we're likely going down to fill some of these gaps to the downside. Also, pay attention to the moving averages that are now crossing over with price action trying to break down below the 20 daily moving average. So you instantly need to get a lot more risk off in this market while SPY is below 411. And remember, we're letting the price action do all the talking, and right now price action is below that support. So we're now looking for SPY 411 as resistance, and we need to break through that to start getting back up into the bull trend. So it's very simple. Manage your risk right there from resistance at 411. And if you're still trying to buy the dip and you're bullish on the S&P 500, you need to manage your risk down here now right around 404. Be careful though trying to catch a falling knife, because this is now officially going to be lower highs and lower lows if SPY breaks below 406. So as soon as SPY breaks below 406, you have the lower low after the lower high, because we do have the lower high here at 412. Do not ignore the price action in the trend, because that is a very early warning sign if SPY starts breaking 406 that we could be entering a downtrend. If you want to take risk on at 406 to 404, that's completely fine because you have well-defined risk there, but you need to get risk off if those support levels fail. Keep in mind we have gaps to fill to the downside right around 401 and 396, so those are likely going to be price targets if we break support at 406. If you want to wait to get bullish, you need to see that break of resistance at 411, but more importantly, the weekly resistance is up there between 414 and 417. And if we break through that resistance, then we are likely off to the races and going back to the August highs. On the NASDAQ 100 triple Qs, we were down 1.89% today, and the triple Qs had that cluster of moving averages yesterday, which was right there at 316. And I talked about that being a launch pad to move up or down in a very drastic move. And you can tell we did get the move to the downside, rejecting that level as resistance with the gap down and closing just below the support at 311. Keep in mind, this support level is a critical support because it's the daily high from back here on February 2nd. And we do have higher lows and higher highs, so this is really a retest of that breakout. I talked about this just yesterday that it was possible we go down and fill the gap at 308 before we go fill the gap at 322. And with the gap down in the price action and the loss of support at 311, it does look like the price action was trying to go down there and fill that gap. So you can never completely rule it out as a possibility that we need to go lower to fill that gap before we go any higher. And you now have critical resistance at the breakout at that rejection at 316. So a couple of ways to play the triple Qs is you're either taking on risk around this support zone, or you're waiting for the break of that resistance at 316, and then you can instantly get more bullish for the gap close at 322 and the double price target at 327. Notice on the daily chart, this is a lower low breakdown because we did break down below the low on April 12th. So you do want to respect the fact that this does look like a double top rejection while we're trading below 312 to 313. So keep in mind, if you're following price action, now if we get a bounce, you're still looking at the possibility of a lower high before the next lower low, and you need to respect the price action and the current trend. And right now, this is clearly looking like it's trying to break down. So if we start to bounce after the earnings and we get back up towards resistance, you need to be very cautious of a rejection there because the bears are now getting confidence. On the Dow Jones, we were down 1.01% today, and the Dow Jones came all the way back down to the rising 20 daily moving average, so we are in a critical support zone between 334 and 335. This is very clearly a bull trend in the Dow Jones, but if it's getting rejected from resistance and we lose support, we still have the possibility to fill this gap down here at 329. Manage your risk right there at critical support between 334 and 335, and the resistance we need to break is up here at 339. On the Russell 2000 IWM ETF, we were down 2.47% today, and the small caps did gap down, so we do have a gap to fill at resistance just above 176, but we're very close to filling the gap down here at 172. If we fill that gap, it could instantly act as support, so we could go a little bit lower, fill that gap, and then immediately start bouncing and try to get that bull breakout to close the gap at 181. So don't get overly bearish on the small caps as they are approaching support between 170 and 172. If we lose support at 170, that's a completely different story, and we could be coming all the way back down to about 164. Critical resistance will be the break above 176, the resistance trend line at 178, and the gap fill of resistance just above 181. On the ARKK ETF, we were down 3.26% today, and we did close below the neckline of support at 37, so this does look like a valid double top rejection from 40.5 with the loss of the neckline. The next critical support is down here right around 36, which we're also in jeopardy of losing that support, and that could be a triple top that brings us all the way down to 32. So as I continue to tell you, this is a bear market in the ARK ETF until we can break resistance at 40.5, and you now have resistance down here at 37. On the VIX, we were up 11% today, and the VIX is trying to spike back up towards 20, but instantly got crushed when it got towards that level, but we do have the VIX back above 18. As far as I'm concerned, the VIX is either above or below 20, and right now it's still below 20, but you instantly need to get a lot more cautious of a volatile market if the VIX spikes out above 20. Any spike in the VIX that takes us to 20 but fails to break above it could simply be a pullback within a bull trend, so we need confirmation of the VIX breaking out above 20 before we get more bearish. On Bitcoin, we're currently up 2.37%, and Bitcoin is bouncing off of the support at 27,000, but we're coming right up to the resistance between 28 and 29,000. In Bitcoin, I would be cautious using this risk level as 27,000 if you're trying to get bullish, but if we break below that, we could come all the way back down to 25,000 and possibly even lower. So manage your risk right here at support at 27,000, and if you're waiting for a breakout, we need to at least break back over the 20 daily moving average, which is currently at 29,000. On Google stock, we were down 2% today, and Google is very close to closing the gap just below 107, and we did close back down below the 20 daily moving average, so you still need to manage a risk between 100 and 102. This is still a bull trend as long as we're above that critical support zone, and we still have gaps to fill right around 107 and 110. So it is still possible that Google is trying to go higher before it goes any lower. On Amazon stock, we were down 3.43% today as Amazon is getting that rejection from the gap fill of the price target at 109, and we're right back down to critical support at 102. This is really a bounce or die level at 102 because if we break down below this, we're likely coming back down towards 98 and then 94. If we bounce from 102 and we get the break above 104, then we're likely coming back up to retest the 200 daily moving average, and if we break above that, we could start running towards 115. On Microsoft stock, we were down 2.25% today, and Microsoft closed all of the gaps to the downside because we closed the gap at 281 and 276. So we can now delete those gaps, and we can see price action did close outside the lower boundary band, so we're getting very oversold. So for Microsoft, there's a good chance we bounce from this support zone and likely come back up to the breakdown of the retest at 284 and possibly even push as high as 290 or the price target up there at 296. If we lose support at 274, then we're likely coming back down to 267. And then below that, the floor falls out and we come all the way back down to 257. So manage your risk right here at critical support at 274. On Nvidia stock, we were down 2.96% today as Nvidia is trying to break down, but this is going to be the critical support zone at 262. If you look at the hourly chart, you'll see why this is such a critical support, and if we break down below it, we could be coming all the way back down to 242. So manage your risk right here in the low 260s, and if you're trying to get bullish, you really need to see a clean break back over 274 because that is going to be the critical resistance, and we're currently dealing with a lower high, lower low rejection. On Tesla stock, we were down 1.16% today as Tesla is trying to hold this support zone at 160, but as you can tell, the boundary bands are expanding and we could be going lower once those bands do expand. I talked about this before and I'll say it again, it's possible Tesla does get a dead cat bounce up towards resistance and still go lower to fill the gap at 146. So even if we get a bounce, you're still looking for resistance levels at 167 and 173. And if we break through those, then we can go fill the gap at 177. However, do not forget this is lower highs and lower lows while we're trading below 167, which means we are in a downtrend and we do have a gap to fill at 146. On Apple stock, we were down 0.94% today, and Apple closed right on top of that support zone at 163, and we still do have the bull trend, so this is a great level to consider taking on long risk. We still have valid upside price targets at 169 and the gap fill at 171 as long as we're above 163, but if we lose support at 163, then we will be looking for the gap fill at 158.5. On the financial sector, we were down 1.72% today, and we did close the gap to the downside, and we're right above the rising 20 daily moving average. So if we lose that support, we're going to be looking for more gaps to fill to the downside. On the industrial sector, we were down 1.84% today, getting that rejection from the previous resistance right around 101.3, and we're back down below the 20 daily moving average. The healthcare sector was down 1.07% today, failing to hold that support at 134, but still in a bull trend, especially while above the rising 20 daily moving average. So we're still bullish as long as we're above 132. On the energy sector, we were down 1.88% and we're right back down to the 50 EMA, and if we fail to hold this as support, we will be looking for the full gap close right around 83. So jumping back over to the S&P 500, without a doubt, this is a sign of caution because we are starting to lose some critical support levels that define this bull trend. You need to manage your risk very well because if this trend turns into something bigger and we continue to trend lower, you don't want to take on too much risk. Remember, below 411, we still have the possibility of this turning into a downtrend, but we need to see that final break of support at SPY 406 to confirm we do have the lower low on the hourly chart. That is a very critical detail you do not want to ignore because price action is still above that support, and we don't have the official downtrend until price action breaks below it. So watch price very closely going into tomorrow and look for the possibility of lower highs and lower lows if we break that support level. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message and only trades the ETS TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.